We are starting the week with some, I would say, positive news that we got on Friday when the BLS jobs report, that's the Bureau of Labor Statistics jobs report, came out. We actually had a 92,000 loss of jobs. The expectation was a 60,000 gain. That was huge, and unemployment went from 4.3 to 4.4%. And as we get close to the Fed meeting, which happens next week, the question now is, with the jobs looking that glum, whatever it is, not looking good, is the Fed going to lower the Fed funds rate? Well, here's where the world kind of has a say. Inflation, well, guess what? Inflation this week, we got a lot going on. And inflation may be ticking up, especially as oil prices go. Because as oil prices rise, costs for everything else rises. Because guess what? We don't run by the sun, we run by oil. And oil prices going up causes prices for shipping and everything else to go up. Where are we going to be with inflation? And we got a couple big inflation reports coming out this week, mixed with some housing reports and a few other GDP reports. So a lot, we're going to kind of get into this. So stay tuned as we walk through the week. Monday, guess what? We don't have a lot of news, but certainly if you've been watching any of the news, the world news, all you see is lots of fires, lots of bombings going on in Iran, in their oil fields or their oil terminals being, destroyed by American and Israeli forces. Again, not good for the economies of the world, certainly not good for the world, period. But that's what's happening right now, and that will impact us as we start the week on Monday. Tuesday, we get ADP weekly preliminary estimates. So it's just an estimate of jobs. Not a big report, but still one that kind of factors into the rest of the week. We get an existing home sales report and then a 3-year Treasury note auction. Wednesday is the first inflation report of the week, and everything's the reports that we're getting are kind of off from where they normally are, and that's largely because of the partial government shutdown we have, which is causing a delay in a lot of the different reports. But on Wednesday, we have the consumer price index and the consumer price index month over month. We're really interested in what the core is. So the consensus right now, or last month, we were at 2.5% on core CPI. The consensus right now is that we'll be at 2.5% still. So that's good news overall. We also have a 10-year Treasury auction. If what's going on across the world continues and stock market keeps getting hammered, that 10-year Treasury auction could be a very good one. That could be very good for interest rates. And then we also on Thursday have the normal, initial, and continuing jobless claims. Those come out. And then another housing report. The housing starts and building permits come out as well on Thursday. And I think that's a pretty important. What is the status? Not so much of initial job losses, although we're starting to see a lot more, but it's not so much losing a job, it's getting a job once you've lost it. And those numbers are getting closer to 2 million. So Friday is the PCE. PCE is a personal consumption expenditure report. Last month, core, which strips out the food and energy prices because those aren't as stable, core was at 3%. The expectation this week is that we will be at 3.1%. If it comes in at 3, that's great. If it comes in lower, even better. But expectation, inflation kind of kicking up a little bit, 3.1%. We also have a GDP report coming out, and we have the University of Michigan Consumer Sentiment Index. Hey, what's the status? What's the consumer from that survey? It comes out every week. It doesn't drive the market, but it's good information. And then I would say the next big thing coming out on Friday, which normally comes out earlier in the week, it usually comes out the first Tuesday or Wednesday of the month, is the JOLTS report. That's the Job Opening Labor Turnover Survey. We were down to 6.5 million last month. The expectations will be a little more, but if it keeps going down, that just shows that there aren't as many new jobs, and which is probably one of the reasons why continuing claims continue to move towards that 2 million that we'll see in the Thursday report. So let's look at the rates as we end this Monday rate update. Despite all the turmoil going on, the war in Iran, and a jobs report, you would think that with both of those, typically it's certainly that jobs report on Friday. Rates should have dropped off a cliff, but they didn't, and it's largely because the price of oil is shooting up big time, and that is really kind of offsetting the advantage we have from that BLS jobs report where unemployment went up and we had negative jobs, negative 92,000 jobs versus the 60,000 growth that was expected. So where do we start the week? Well, interest rates really went up about 1/4 of a point across the board over the course of the last week. Conventional, we're right around 6.14%, 6.44% for jumbo. So we're saying 6.1 to 6.5% for conventional. And VA, you're right smack in the middle of the five or mid-high fives at right around 5.74. Off of the low at 5.64, but below the 5.8 high that we've had over the course of the last couple weeks. So really, when you look at it, everything going on, rates being pretty steady, things could get choppy, but the way I see it, if the rate makes sense, I would not be a floating kind of guy because you know what? Rates can pop up. There's a lot going on. Just if you can get that payment where you're comfortable, you got to lock it in. All right, that's what I have for you this week. You guys have a great week. We'll talk to you later. Aloha.